Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. As we get ready for market open this Monday, all eyes in the fintech world are often on one name, SoFi Technologies, Nasdaq SoFi. In my view, SoFi's journey has been one of the most dynamic stories in digital finance, really transforming from just student loans into a full-blown financial one-stop shop. Today, for all you SoFi investors out there, I want to give you a clear, close look into where the stock stands right now ahead of the trading week. We'll look at its recent vibe on the market, break down the latest numbers, pinpoint what's truly driving its growth, discuss what big events are on the horizon, acknowledge the real risks, talk about its valuation, including why we're not talking about dividends with SoFi, and ultimately what this all means for your investment thesis. Let's kick things off with SoFi's recent market performance and investor mood. Heading into this Monday, what we're seeing is a stock that's been in a bit of a tug of war. Like many growth companies, especially in fintech, it's had its ups and downs. The price action often swings with the broader tech market, which makes sense. From what I'm observing in pre-market chatter and trading, there's a definite sense of cautious optimism. Investors believe in the long-term story, but they're also very aware that after a good run, the bar for performance is set pretty high. We're seeing solid trading volume, which tells me that both the big institutional players and individual investors are very much engaged with SoFi, keeping it a lively stock on the exchanges. Now let's talk numbers, the bread and butter of our analysis. Looking back at their last reported financials, what truly stands out is their incredible momentum on the top line. In their most recent quarter, SoFi posted revenue growth that really showcased their ability to expand, even when the broader credit environment might be a bit tighter. This diversified model they've built across lending, their tech platform, and financial services is precisely what's giving them that resilience. And it's not just revenue. We also saw some really encouraging signs on the profitability front. Their earnings per share, which importantly beat consensus estimates, pointed to an improving net margin. This tells us management is doing a good job on cost control and, crucially, that more of their revenue is coming from those higher margin parts of the business, like their technology platform. On the customer side, membership growth has been a massive win. They're adding hundreds of thousands of new members each quarter, which is fantastic for future growth. What's even better, though, is how deeply these members are engaging. We're seeing a strong trend of product adoption, with members using an average of 1.3 products each. This might sound small, but it's huge. It means members are not just coming for one service, say a loan, but are then using SoFi for banking, investing, or credit cards. That's how you build deep customer relationships and, more importantly for us as investors, multiple, sticky revenue streams. So, what's truly driving this growth? SoFi's strategy hinges on its three main business segments. First, lending. While student loans were their start, they've smartly expanded into personal loans and home loans. What's crucial here isn't just the sheer volume of loans, but how they're managing risk and, critically, pivoting towards more fee-based income. This makes them less sensitive to interest rate swings and reduces the capital they need to hold, which is a big plus. Second, their technology platform, Galileo. This is, in my view, the unsung hero and a major differentiator. Galileo isn't just an internal tool, it's a powerful payments and financial tech engine that other fintech companies use. This B2B revenue is high margin, recurring, and positions SoFi as a fundamental backbone of the entire digital payments ecosystem. This is a very valuable asset. And third, financial services. This is where they offer everything from checking and savings accounts to investment platforms and crypto trading. This segment is all about cross-selling and deepening customer ties. When a customer uses SoFi for multiple needs, they're more likely to stay, increasing their lifetime value to the company. Looking ahead, we're monitoring several key developments and catalysts that could impact SoFi's trajectory. What we've seen recently, for instance, is their push into more sophisticated trading options like level 1 options trading, directly challenging competitors like Robinhood. This move isn't just about more trading revenue, it's about attracting a more engaged, active user base. Their foray into blockchain-based remittance services, potentially disrupting traditional money transfers, is another forward-looking move. And giving everyday investors access to private market funds like fractional shares in companies such as OpenAI or SpaceX, that's a true game changer and a significant competitive advantage. These moves show a management team that's constantly innovating to stay ahead. Now let's talk about the other side of the coin, risks and challenges. Valuation is always a big one for growth stocks. SoFi's current price, reflecting its impressive growth, often means the market has already factored in a lot of future success. This leaves less wiggle room. If for any reason they miss on an earnings report or issue cautious guidance, we could see a quick correction. Competition is fierce. They're up against not just other fintech innovators, but also established banks who are now catching up on digital offerings. SoFi has to keep innovating and offering a superior user experience to maintain its edge. The macroeconomic environment is another factor. Rising interest rates, which we've certainly seen, can impact loan demand, and a broader economic slowdown could lead to increased credit losses. While SoFi's underwriting is, from what we understand, quite conservative, they aren't immune to these larger economic forces. And finally, execution. With so many innovative projects across lending, tech, and investing, flawless execution is absolutely critical. Any delays or underperformance in new ventures could certainly affect their revenue momentum. A quick note on dividends. For SoFi investors, it's important to understand that SoFi, like most high-growth companies, does not currently pay a dividend. And frankly, we shouldn't expect them to anytime soon. Their focus, rightfully so, is on reinvesting every dollar back into the business to fuel that rapid expansion and market share capture. For growth companies, that's often the most value accretive strategy for shareholders. So the investment case here is purely about capital appreciation, not income generation. So what should investors be considering as we head into this Monday's trading? If you're a believer in the long-term transformation of financial services, SoFi's integrated ecosystem presents, in my view, a very compelling growth story. It's truly an all-in-one digital bank that few competitors can match in terms of seamless product integration. For those of you holding SoFi or thinking about initiating a position, keep a very close eye on their upcoming performance metrics. Specifically, look for continued expansion in membership and product adoption, further improvements in profitability and margins, and solid growth from that Galileo tech platform. These are, in our analysis, the true indicators of sustained long-term value. Be pragmatic about the valuation, stay diversified, and size your positions according to your personal risk tolerance, as this stock, like many in the growth sector, will likely continue to see its share of volatility. Thanks so much for tuning into this pre-market deep dive. If you found this analysis helpful, please do me a favor. Like this video, subscribe to Research Investment for more insights, and drop a comment below with your questions or any other stocks you'd like me to cover next. Stay sharp, invest smart, and I'll see you next time.